And we are live. Happy Thursday. So excited to see you here today. Today, we are going to be talking about family legacy. And so, since this whole month, we're kind of talking about the sandwich generation and being in the middle of that, a lot of it is the legacy that you're leaving, or, some of these paperworks really that we have to get in check for our elders or for ourselves. So we're so excited to have Matt on today, and he's going to be talking all about it. For those new tuning in, we're Purse Strings. We're here to provide some great financial education, get those questions answered. And then when you need a financial professional to put things in transition or transaction, we have top tier financial professionals willing, ready, and able to help you. All things finance, realtors, lenders, FAs, all that good stuff. We call those our Purse Strings approved professionals, and Matthew is one of them. So excited to have you here today.
Thank you.
Yeah. Do you want to give a little intro of yourself for those who have not met you before?
Sure. So my name's Matt. I run a team of advisors here. We have 3 advisors, 4 staff, and we manage over 300 million in assets. A lot of what I'm going to talk to you guys about today is just stories from working with clients and then personal stories working with my own family. So yeah,
Awesome.
I certainly have a presentation to give, but questions are much appreciated.
Okay. We'll make sure we get some questions in there. And where are you calling in from today? Just so people know.
Gray, San Diego.
It's equally as gray here, but maybe you have a little bit more warmth. Alrighty. Well, I'm just going to pull up these slides and we'll just we'll jump in and get to the good stuff. Let me figure out how to share this. Nope, that's not right. Give me 1 second. All right, can you see it? Nope, still not right. Give me 1 more second. It's just one of those days.
It's a Monday, Thursday.
Yeah, sounds about right. So we'll do this. Wow. All right. You see it?
Well, not yet, but that's okay. I can start while you're working on it.
Okay.
So what we're going to talk about today is family legacy. We're going to get into what is legacy and how we define it. We're going to talk about the 3 phases or the 3 generations of legacy. So that includes the foundational generation, the succession or sandwich generation, as we define it, and then the legacy generation. Then we'll talk about the problems that each generation may run into, and then some solutions, including communication and trust, education preparedness, and having a goal or a plan. And all of this comes from years of experience working with clients, but also constantly doing research on how to address some of the issues that continually come up for clients.
We're just going to do this old-fashioned style.
Perfect. So let's just jump into what is legacy. So if you'll skip to that next screen. Oh, back one.
There we go.
So one of the things that we like to use when describing legacy is the example of a copper beech tree. And so that's a picture of a copper beech tree there. One of the unique things about that type of tree is it takes over 100 years for it to be mature. And so the person who's planting it never really gets to see the full maturity of the tree. And so it's something that you're planting with the expectation that somebody in the future is going to benefit from it. And that's really what the legacy is. It can be money, it can be values, it can be a lot of different things. But really going forward with that expectation that you're building something for somebody else. So then we'll go to that next slide. So with that in mind, there's generally 3 different generations that we work with. Traditionally, that's the case. Now, it's kind of funny. Tracy and I have been working on this with clients for a while, and there really isn't a traditional. You have different generations and different families mixing, and so there's a lot of different things that can come into play. But traditionally speaking, you have your foundational generation. Those are the grandparents. Typically, they would be the ones who have begun the legacy. Maybe they started a family business and now they're either selling it, they're passing it on to the next generation, or they've accumulated some wealth over time and they want to discuss what that looks like for the family. Second generation is that succession or sandwich generation, the ones right in the middle. I myself am in that situation. In fact, I have a couple living grandparents. One just turned 100 last year. The others 2 years away. So we've got that 4th step, which would also be considered foundational. But in that succession, you or sandwich generation, you have the concerns of the foundational generation, your parents or grandparents, but then you also have the legacy generation, which is your kids and or grandkids that you're considering. And oftentimes you have those kinds of things, those kinds of concerns come up while you're planning your own life. So how do you go about doing that? So let's go to the next slide. So what we find is there's a lot of different problems that can come up and do come up over time. For that foundational generation, one of the major problems is running out of money. And it can be because of poor planning. It can be, right now we're seeing inflation. You've planned, and by the way, there's a fire truck about to go by, so I hope that doesn't interrupt too much. Poor planning is an example of one thing that can happen. Not saving enough, not planning for emergencies, not
Right on cue.
not planning for medical emergencies or long-term care needs, or one that I find comes up quite often that nobody plans for, and that's wanting to help kids and grandkids and sacrificing their own plan for others. And unfortunately, we see that quite often, that you end up paying for grandkids' college, and then you have inflation, and now the budget that you created doesn't make it all the way to where you need it to. So that's one of the major problems. With this succession or sandwich generation, pretty straightforward, assisting parents, assisting kids, wanting to be able to make sure they're taken care of, which in turn sacrifices your own plan and kind of creates a perpetual snowball of, okay, I'm helping grandma and helping my kids, but now my kids are going to have to help me. And so how to avoid that issue? And then again, poor planning, not having a good grasp of where you're going or what you're trying to accomplish. And then with the legacy generation, we're seeing something that we haven't seen in a long time. So there's a story, phrase, analogy I like to use that is strong men create easy times. Easy times create weak men. Weak men create hard times. Hard times create strong men. So right now we're seeing, after years and years and years of good times, we're starting to see some hard times. And and when I say men, I mean universally, men and women. What we're seeing is people have not had to plan or gird for hard times. And so when those hard times come, they're completely unprepared for them. And so we're in one of those cycles, and we've seen these cycles happen every 3 or 4 generations since the beginning of this country and long before this country. So what we're finding is there's nobody there who's giving guidance to that legacy generation. They're just saying, why aren't you? Why haven't you? Why don't you? And so I think guidance is one of the big lacking areas or problems for that legacy generation. And it's created a generation of, I want it now, or I expect it now. And you've got parents who, in that sandwich generation, try to appease their kids and at the sacrifice of themselves. And so it's again that big snowball that's rolling downhill and getting bigger and bigger and bigger. And at some point that snowball is going to hit a wall and we're going to have to start over. So the whole purpose is to have that conversation before it happens. So next slide, please.
I just wanted to comment on some of those things that you said, because there's so many. I mean, you really see the snowball growing as it happens. And I know a lot of people or parents or grandparents, try to fund college and things like that. But, as the student, you didn't know that the contingency was, I have to pay for your retirement later. It's like, I would have just taken out the student loans if we had this conversation. But it is planning, about what do you want? What are those goals? Which sometimes, people just say more money. Well, that's not going to get you anywhere. You're always going to want more. But if it's, I want to have an easy retirement, I want to be able to pay, and I want to be able to pay for this college for these kids, then you know what you're working for and you know where that money is going to be allocated.
Absolutely.
All right, get you on to the next slide.
Okay. So here are the solutions. And quite frankly, the number one solution, communication and trust, is the defining factor in whether you have success or failure. If within the family you're communicating and you have trust with each other, then you can take anything head on. In fact, 60% of the time, good communication and trust produce success. And 60% of the time, poor communication and trust cause failure. So if you're doing that one thing within your family, you're doing well. So when you're talking about that foundational generation, grandma, and maybe she's getting to the point, grandpa passed away a while ago, she's getting to the point where she can't take care of her home anymore. And things are starting to be trouble. Maybe she's fallen a couple times or things like that. There needs to be communication with her about what she wants and about how that may affect the family as a whole and what can be done. What most people do, or what I've experienced many times, is it's just not talked about. We wait until there's a forced decision. Grandma falls down, breaks her hip, and now we don't have a choice. It's forced on grandma, and she feels like she didn't get to make a decision. So that communication piece is really important. Um, for the uh, succession generation, it's really important that you're communicating with both generations, that you're communicating, number one, what your goals are and how you intend on helping, um, if at all. So a perfect example of this is I had a conversation with my parents probably about 15 years ago. They were 10 or 15 years away from retirement. Both my parents have retired at this point. And frankly, they didn't have enough saved up. And I said, "You're not coming to live with us. But the good thing is you have plenty of time to fix these things. And so here's what you need to do." And they did it. Both of them are fully retired. They're in a good position. They have a good plan. And worst comes to worst, they can live with my sister. But
Does she know that?
she'd probably appreciate it. But they're taken care of. And it was a conversation that was not an easy conversation to have, but it was one that was really important, especially looking in hindsight, because I could have just ignored that conversation and they could have had whatever expectations they had. And frankly, they feel much better about themselves having changed their habits and what they were doing. And a lot of what I've learned about my business and how I work with my kids is directly attributable to what I learned not to do from my parents. So um, you got to take those lessons and move them forward.
I do love in that story how, your parents were 10 years out of retirement. A lot of people start getting anxious at that time and think there won't be enough, but you came to the table, you had the conversation, which a lot of people don't want to do, but then you saw, okay, this is a plan. And now I know if I take these actions, I can be secure. Because if you keep pushing it off, well, then, yeah, you won't be secure, but you need to have that conversation, make that game plan, which they really did. And then, yeah, you have that confidence. And they had enough time to really make that happen, which was very smart on your behalf.
Yeah. And to their credit, they took action.
Mm-hmm.
So you can have the conversation, but it's the action that's most important. And they took that action. So let's see. And then with the communication with the legacy generation or your kids and grandkids, it's important that they're involved, that they're learning, that they see an example of what to do. Now, like I said, it can be just as valuable to learn what not to do. But I'd prefer you learn right off the bat what you should be doing. So we'll talk a little bit about what that might look like, some of the things we've done in our family. But on the education and preparedness side, 25% of all failure or success is determined by being educated and prepared within the family. And what that might mean is having good values that are aligned with what the family values are. So again, talking to parents, understanding what, if they have money that they plan on creating a legacy with, what is their plan? Is it to pay off your mortgage, to pay off any student debts, or is it to have it be something that's an ongoing benefit beyond your life, beyond your kids' life, into further generations? And what might that look like? So a perfect example, we talked a minute ago about education and sacrificing for the grandkids so they can go to school, not knowing that they may have to sacrifice back. One of the things that I recommend clients do, if they're so inclined, is to create a loan for the education. And if you graduate, then a portion of it, up to 100%, is forgiven. So create that motivation to actually graduate. Same thing with if you have a business plan or a business you want to start and you need funds to start it. Create a loan, and then if that business follows the business plan and is successful in the way that you portrayed that it would be, then that loan can be forgiven. And if it's not, then you pay that loan back into the family legacy so others can benefit from it in the future. So either way, you're creating a benefit for the family. So if you've created a winning business, or you've created an income by getting a degree in something that pushes you forward, that's adding value to the family. So a loan can be forgiven because you've added that value. And if it fails or whatever, now you have this loan that puts the funds back in.
So that's a smart idea to really have the skin in the game. I know some people, their parents said they'll pay for their college, but they'll pay for every class you get above a C, and it's like, I'm not paying for a class that you're going to fail. It's $6, $7, $8 a class. So it's a great way to have, skin in the game, but also be, have someone support you as well.
That's a great point. The other thing that comes up quite often is, what if my kid doesn't go to school? Or what if they go to trade school? Is a 4-year degree worth more than going to a trade school? And I would say no. Mm-hmm. I would say whatever way you're using your skills and adding to the family, it's a value. And it doesn't have to be equal. It can be fair without being equal. So
that's a great point as well.
Something to be considered there. Let's see. So on the succession generation or sandwich generation side, always continuing to learn and grow. So you're going to make mistakes. You're going to do things right. You're going to have to adjust your plan over time because things come up that you're not prepared for. And being on things like this, learning something that you hadn't learned before, looking at things in a different way, is one of the most important things, especially in that sandwich generation, because you're going to have things coming at you from both directions, and being prepared to make changes. One of the things we do as a family for our legacy generation, which is our kids, is we do what's called a family bank. And we've learned a lot from this family bank. So for simplicity, my wife set up that each week the kids get X amount for their chores. And each month they're allowed to take a portion of that and put it into the family bank. And for simplicity, the family bank earns 10% per month. My kids learned way too quickly that family bank pays a lot of money. So they immediately each put $100 into the family bank. So each month they were getting $10 or more in interest, 2 weeks worth of chore money just for keeping some money there. And my wife had to switch it up and be like, okay, I thought you guys would be putting like $2 or $3 a week in here, not going all gusto on it. So she said, once you get to 100, now you have to take the money out and put it into a CD, and you get CD rates. She's actually taking that money and putting it in the bank for them. and then they get to see the statements and see their interest and all of that. But being able to have them be involved and see how fast they learn when they're being taught the right things to do, it's kind of amazing. It's kind of amazing seeing through their eyes what they're learning, what I didn't learn as a kid, what good habits, good saving, and those kinds of things.
Sounds like you have great savers on your hands. They're smart kids.
Yes.
Do they have to pay any bills with those earnings?
No, but they have to pay if there's something that they want. So
Yep.
for example, my son and I will drop off my daughter at horseback riding, and he likes to go fishing. And so we'll go fishing for a couple hours while she's doing that. He has to buy the bait. And so
Nice.
he has a budget for what the bait costs and what kinds of bait he wants to use and that kind of thing. So, and he's about to turn 9 this month.
That's awesome. That's really great.
He's actually the best saver of all of us. He has a jar on his dresser with $384 on it. So
you know where to get some cash.
Exactly. Yeah. So keeping the kids involved, having little projects like that is really important. And then the final is having a goal or having a plan. With grandma, have a goal for what happens when grandma passes away, and have grandma involved in that. One of the worst discussions and usually most contentious discussions that I ever have with clients is grandma's passed away. She wrote in her trust, this is what's going to happen. And now I'm opening up accounts with the beneficiaries, and they're like, what? Wait, grandma told me I was getting this. And so the communication has failed along the way. And now the trust between the beneficiaries is completely broken. And you start having conversations about, well, Eloise is getting more than I am because she took care of grandma for the last year of her life. I don't think that's fair. Well, these conversations should have been had beforehand. So making sure that communication is there, that everybody understands their part, everybody understands why the money is being dispersed the way it is. Another example, I have a client who had quick onset ALS. She went from running half marathons to couldn't open a door, couldn't actually grab a handle of a door and turn it. And within a year and a half, she had passed away. Went through the whole cycle of being in a wheelchair, not being able to speak, needing oxygen, needing a ventilator, to passing away in a year and a half. She had created her trust ahead of time. Her and her husband each had separate trusts that worked in the same way. And they had specific things in the trusts about how you get the money. The money stays in the trust, but if you need it for education or you need it to start a business, that's how you can access the money. When mom died, all the kids were like going to dad saying, okay, when do I get my money? And he's like, that's not how this works. And so that communication, there was a year and a half to be having that communication or longer, and it was never had. And it created a lot of turmoil where they thought dad was keeping money that was not meant for him, when in actuality, it was being kept exactly the way mom wanted it to be kept.
No.
And so that communication created, again, a lot of turmoil within the family. To this day, it's been about 3 or 4 years, and to this day, there's still a lot of turmoil within that family.
It does seem like, yeah, communication is really key in all of this. And I was thinking now, so many of us have very mixed families of, I have some siblings now that are adult siblings. I never really grew up with them. And so, if their dad passes away, do I get any of that money? Do they just get that money? It's all these different things now. Is that my grandma? Is that, but do you get my money if my mom dies? It's a whole mix of things that you need to talk about because otherwise, yeah, it's going to turn into a huge mess later.
Yep, exactly. And then finally, having a goal or a plan for the sandwich generation. You just have to be aware of all the pitfalls that could potentially come your way. So we talked a little bit about the medical needs, long-term care needs. What I find is a lot of these conversations happen after the foundational generation grandmother is unable to qualify for long-term care or some other way of funding it. And so now it becomes the family's problem. Whereas if those conversations were had along the way, you avoid a lot of those issues. And then kind of a fun story. I talked about my kids and the family bank. One of the things we do is we talk about like our summer trip. So right now we're potentially going to Minnesota. My great grandparents had cabins on a lake up there. They're still in the family. And I remember going there when I was a kid during the summers and loving it. So we're talking about maybe doing that this summer. And so we start talking about, okay, is this something where we want to fly, where we want to use some of our budget for flying? And we're getting our kids involved and explaining, okay, here's the cost of doing that. If we drive, here's the cost of doing that. And if we drive, then here's some things we could do along the way, but it'll limit how much time we can spend in Minnesota. And so we get them involved, and decisions where we don't have a preference, we actually let them vote on it. And so we let them be fully involved. Now their vote may count less, or we may know how they're going to vote, but where it matters, we allow them to be involved and help make decisions as a family. And that only strengthens that communication and strengthens that confidence in making financial decisions and planning and doing those sorts of things. So a good way to go ahead.
I was going to say that's really great, especially, if it's a long car ride, you understood that this is kind of what we're committing to because this is the give and the take of, it's a longer car ride, but then we get to do all these extra things. And that's how we're weighing it out. Time and money and just your different options, which is just great growing up and understanding that. Because sometimes you think your parents just have unlimited money, because this is what we do or that's how it's done. But you really get to weigh in on what you want to do.
That's right. You have a voice within the family.
Exactly. That's great. Well, I feel like you've covered a lot of great content today. I feel like the bottom line is communication, really. We need to have these conversations. Nobody's getting out alive. So something's going to happen someday. Yeah. What's the best way for people to reach out to you if they want to work with you or if they have more questions?
So the email at the bottom, matt@cwmsd.com, would be the best way to reach out, whether you have a question or you want to schedule an appointment or just have a conversation. I'm happy to do it.
Awesome. Matt's also one of our Purse Strings approved professionals, so you can check him out on our site, pursestrings.co. And we will be back next week with one more fun topic about being part of the sandwich generation. So thank you, Matt, for jumping on today, and we'll talk to everyone soon.
Great. Thanks, Maggie.
Bye.